Okay, Nachilima Statements of Assets and Liabilities that first March 2018. Okay, we've got this information for this person here, and we've got the cash book summary for Nachilima, which is here. And then they tell us in the question here the following transactions were not recorded in the cash book. Okay, drawings of 100 kwacha, cash purchases of 500 kwacha, additional cash sales of 3,400. So the first thing we've asked, calculate the balance on the cash book at 1st April 2018. Okay. Then number two, calculate for the year end. Uh-huh. If you're using a phone, you won't be able to see. let us con- let, let us con- let us continue. Because once the confusion kicks in, this excitement will die down. Once the confusion kicks in, I'm happy I'm excited. Which one? The one on bank reconciliation. Okay, yeah, tomorrow we'll look at it. Tomorrow we'll have a class, I think, from 16 to 19, I think. 16 to 19, we can have another class. We'll tackle bank reconciliations, manufacturing accounts, partnerships. I believe we're all okay with partnerships, huh? Jesus, 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 Jesus. You can borrow my brain on that day to cost you 50,000 kwacha. You just come, you deposit 50, I give you my brain, and please bring it back. Please bring it back. Okay. We will. All right. So part two, the verses calculate for the year ended of March, year ended 31st March, total purchases, total revenue, and then prepare an income statement. Okay. So first things first, we need to close this cash book here. We have to find the balance. All right. Now some transactions haven't been recorded. Okay, some transactions haven't been recorded. So we need to record them and add them into the cash book. All right. Yes. So we have drawings of 100 kwacha. Okay. We've withdrawn money from the cash book. Colleagues, what is the journal entry for this? You won't be asked to put the journal entry, okay? You are just supposed to put this transaction in the cash book. But we're going to do some journal entries so that we see what's happening here. Okay. So yes, colleagues, what would be the journal entry for these drawings of 100 kwacha? Mm-hmm. Debit, and what did you credit? Correct. Yes. Yes. According to the double entry rules, have you seen increase in drawings, you debit. Okay. Cash is an asset, so it's reducing. Reduction in an asset, you credit. Okay. This is how you should use this on exam day. Okay. So on our cash book, I was already solving this, but we'll put it here. Cash book. There put the cash book. Okay, I'll open it again. I'll use Excel. Yes, so you debit drawings and you credit the cash book, okay? Debit drawings. Okay, so in the cash book, on the drawings, oh, this is the cash book already. Yes, cash book. Okay, so drawings, so this in drawings, it was initially there, 2000. So we're adding this 100 kwacha into this credit side here. So drawings of the cash book is supposed to read as 2100 kwacha. Any questions? So log in and log out. I'm sharing the screen here. Is everyone able to see my screen? 100% without. So I just log in and log out. Okay. Log in and log out. All right. You have got a question, Mr. Kasono? Okay. We have cash purchases of 500 kwacha. What is the general entry for this for cash purchases? That is correct. All right. Purchases is an expense account. Okay. Increase in expenses, you debit. Cash is an asset. Now, since we are paying out cash, so we have a reduction in an asset, so we credit. Okay. So you debit purchases. Five hundred. Cash. 500. Yes. So on the cash book, on the credit side, we're going to have cash purchases over 500 kwacha. Any questions? Additional cash sales of 3,400. So when we make a cash sale, what is the general entry? When you make a cash sale, what will be your journal entry? We started on fire. Now we're getting. Oh, hello, colleagues. Are we there? My data just finished. Sorry, colleagues. My data just finished. No, if the laptop goes down, someone can just come home, with your laptop. We even finish the lesson. You just come to my house. I send you the location. Eh, yes, I was. Where were we when I was kicked out? Okay. Then the next transaction here is additional cash sales of 3,400. So what would be the journal entry for these cash sales? When you make a cash sale, what two accounts are involved? In that sentence, you should be able to determine the accounts from the sentence. Cash sales? Yes. Yes. Colleagues, eh, so you've remixed it. You've remixed it. Yes. Yes. Okay. Remember, according to the double entry rules, cash is an asset. Increase in an asset, you debit. Sales is income. Increase in sales, you credit. Okay. Uh-huh. Mm-hmm. A diagram like, yes, yes, the diagram is here, sir. Do not worry, sir. You are overthinking, okay? Just hold on, okay? This is what's happening. There have been some transactions that have been omitted or haven't been recorded. So we are putting those transactions back into the cash book. That's what's happening here. Okay. Three transactions were not recorded in the cash book. So we are putting those transactions into the cash book. But I want you to see the whole story. Okay. So that we know why things are happening like that. So maybe the diagram, is it the cash book diagram which you're talking about? Let's see. Okay. So we debit cash 3,400. Okay. So 6,400 plus, I mean, 6,000 plus 3,400, we get 9,400. This is our new value for cash sales. So these were the transactions that were omitted, which we had to include. So now we can tabulate the balance for the cash book. Okay. For 28th September, 1st September. So this is how you get the balance for any account, right? You get the total debit and you also get the total credit. You see which one is high. Okay. So if we add up the debit side, 45 plus 18.5 plus 94 plus 400. Why isn't it bright? Add this, and someone add the credit side. Okay. Someone add the credit side, someone debit. That's debit, right? Then credit side, because you have to see which one is the higher side. So here we put here 32,800. I'm just putting it here so that I remember the number. Do not ever, in the exam, don't put a number here. 30,400. Okay. So you put the big amount, 32,800. Then here, 32,800. Okay. Then the balance carried it down. Okay. Always goes on the lower side at the end of a period. Okay. So I say 31st December, 31st March, because this company, their year ends in March. So 31st March 2017, balance carried down, put it like this. So the balance carried down, you're just subtracting debit minus credit. Okay, colleagues, with these T accounts, it's always either you're subtracting debit minus credit or credit minus debit. Okay. So whichever is higher comes first. So you say 32,800 minus 30,400. 2,400, yes. Then you say balance brought down 1st April. 1st April 2018, 2,400. Any questions? That's there. first part of the question that we needed to do. So, any questions? Mm-hmm. Mm-hmm. No, no, this step, I did it earlier on in the day. I did it. Yes, you need to type. But this table, as I've said, it's just this table here, which is already here. We're just making an adjustment for but to add cash purchases, the sales, and the drawings. But it's basically, yes, it's basically this one. Yes. So, colleagues, remember the secret for the cash book. The cash is an asset account. So the cash book increases with the debit. Whatever is going to make your money increase goes on the debit side of the cash book. Whatever is going to make your money decrease goes on the credit side of the cash. Can we remember that concept so that even in bank reconciliation, this same concept applies there? Yes, Mr. Chimunyo? Yes. Uh-huh. Yes. 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 The cash book summary. Yes. Yes. Because those transactions, okay, were done with cash. Okay. Yes. So you're following Mr. Chimunya? Mm. You are saying no, sir. Me, I'm getting confused, but now you're following. Okay, colleagues, we are done with the first part. 2 marks. Okay. Next, now we have to find the total purchases and the total revenue. Okay. So here, could you mute your mic? Kindly mute your mic. Yes. So we have to get the total purchases. Okay. So these purchases, colleagues, they include the cash purchases and they also include the credit purchases. So the cash purchases, we've got information about that, but we don't have information about the credit purchases. Okay. This is what we're now looking for, the credit purchases. So the credit purchases, you're going to derive that from the payables control account. Remember the payables control account, this is an account that keeps all the information of your creditors. Okay, because you're going to have a lot of creditors, so you want to just compile everybody up into one account. That's the purpose of these control accounts. Okay, as a business, you have a lot of creditors. Okay, but you just want to put all of them into one account. So this payables control account is a liability account. Okay, the payables control account, is a liability account, meaning it increased according to the double entry rules here. Liabilities always increase with credit and they reduce with debit. Okay, so for this control account, what is on the debit side reduces, what is on the credit side increases. So we need to get our cash purchases, I mean our credit purchases. So now, uh-huh, uh-huh, yes, yes, yes. So now this is where the puzzles begin, okay? Because you have to look through. With incomplete records, you have to look through all the information, okay? So you come here to your trade payables here first. Okay, we've got this information here. Trade payables, 31st March 2017. Trade pay 8,500. Then trade payables, 31st March 2018, 6,500. So here we have to determine what is our opening balance and what is our closing balance. Colleagues, what is our opening balance and what is our closing balance? Uh-huh. Uh-huh. Okay. Once you now know your opening balance and your closing balance, you now need to know, okay, since the payables control account is a liability account, so where am I going to put the opening balance? On the debit side or on the credit side? Credit side, yes. Yes, credit side. Okay. All of this is deriving from this table here, okay, colleagues? Once you know the account you're dealing with, if it's an asset account, the balance has to come on the debit side. If it's a liability, the balance has to come on the credit side. If it's capital, balance has to come on the credit side. If it's expenses, debit side. Yes. Mr. Tombo, you have a question? And what is the answer? Okay. So balance brought down credit side. Here's that 8,500. Okay. Yes. Then the closing balance. Okay. Put it, the balance carried down, put it on the debit side. Okay. Put it on the debit side like this. You open your payables control account like this, payables control account. Balance brought down 8,500. You indicate because you need to show this in this type of question. Okay, you need to show this. So you put balance brought down here on the debit side, then balance carried down. Remember, the balance carried down always comes on the lower side. If you remember how we closed the cash book there, okay, the balance carried down was brought on the lower side. Okay, and the balance carried down, you're going to put this value here, the closing amount here, because this is the amount that is being carried into the next 2019. Okay, so you put 6,500 there. Any questions before I move further? Hmm. Uh-huh. Yes, the carried down is the difference between the debits and the credits. Yes. After you've done this now, you have to look for any transactions in the information that you've been given that can relate to the uh, payables control account. So you have to look for any transactions that relate to the payables control account. So we come back to our information here. In our cash book, do we see any transaction that is related to the payables control account? The payables control account is usually dealing with credit purchases. So if we look on our cash book, do we see any transaction dealing with the payables control account? Uh-huh. There's payment for credit purchases, right? Yes. So here, since it's on the credit side, where is it going to appear on the payables control account? Since on the cash book is on the credit side, okay, the general entry when they are paying for, so that we get the bigger picture here. Whenever you're paying for a credit purchase, what is the general entry when you're paying for a credit purchase? Yes. Yes, Madam Geraldine. Okay. Yes. Whenever you make a credit purchase, what's the general entry whenever you make a credit purchase? So that we see the full picture here. Yes, you debit the payables. So in this case, we're talking about the payables control account. Because whenever you make a credit, whenever you credit purchase, no. A credit purchase, you have to debit purchases. No, you are crediting the payables. You are crediting the payables. You debit purchases. Yes, then you credit the payables. Yes, the liability. Because you are owing now. Okay. Why we're debiting purchases? Purchases is an expense according to the double entries rules. Increase in an expense, you debit. And according to the accruals concept, whenever you incur an expense, even though money is not exchanged, you need to record. So here we debit purchases. Then we're crediting payables because now we're owing. The payables, according to the double entry rule, they are liabilities. Increasing the liability, you credit. All right. This is for a credit purchase. Now, what about if you make so these credit purchases on the control account, where are they going to appear? Forgot to mention that. On this control account we've made here, before I show, where is it going to appear credit purchases? It's going to appear on the credit side, colleagues. Credit purchases. My question was, where does credit purchases appear on this control account which we're making? We've known the general entry for a credit purchase. So now we have to see where it's going to appear on our control account. So that my question was, where in the control account that we're making, where is the credit purchase is going to appear? And I said it's going to appear on the credit side. Okay, like here. Okay. Yes, it's going to appear on the credit side. And this is the figure that we are looking for, these credit purchases. This is the figure that we are looking for. Okay. So you should know when you're doing this question here, you should know that, okay, so my credit purchases should be on the credit side of my payables control account, and it's the figure that I'm looking for. Okay. Then we said the other transaction which deals with the payables control account was the payments for credit purchases. Okay. Payment, whenever we're paying money that we owed, okay, it affects the payables control account. So what is the general entry for a whenever you pay for a credit purchase? What is the general entry? Hmm. The liability is reducing when you pay for a credit purchase. So you debit the payables. Okay. And then you credit cash. Since you're paying with cash. Cash is an asset. Decrease in an asset, you credit. Payables is a liability. Decrease in a liability, you debit. So that's why these payments for credit purchases has appeared on this side, the debit side here. So you put there 19,500. Okay. So the figure that we want to get here from this payables control account, the figure that we want to get is the figure for credit purchases. All right. We have our balance carried brought down from the information, our balance carried down from the information, and the payment to for credit purchases from the information. So now what we need to find is what were the credit purchases? What was the amount? What's the figure for the credit purchases? Okay. So in order to find the figure for the credit, excuse me, Excuse me. In order to find the figure for the credit purchases, this is how you do it. We have 85 here. We have 65 here. And we have, is it 19,500 here. Okay, and we're trying to find X. Okay, so what you're going to do is this: add 19,500 plus 6,500. What do you get? 19,500 plus 6,500. Okay, 26,000. So to get our value of X, which is our credit purchases, you're going to say 26,000 minus 8,500 to get our value of X. 26,000 minus 8,500, what do we get? 17,500. So that's the value of their credit purchases, 17,500. Any questions? So here's a recap. Okay, here's okay. Yes. So this is a recap of what was done, okay? And I'll be as slow as possible. Okay. So we wanted. Let me just do the recap, sir. Maybe in the recap, your question will be answered. Okay. Yes. Okay. Yes. So colleagues, this is the recap. Okay. We wanted to get our credit purchases from the payables control account. Okay. We want to get the credit purchases from where? The payables control account. So the first thing we need to do is we need to step one, get your the balance brought down. Okay. From this information given here, get the balance brought down and the balance carried down. Okay. Balance brought down 8,500. Balance carried down 6,500. After you've put in the balance brought down and the balance carried down, okay, since the payable control account is a liability account, so balance brought down will be on the credit side. Now, after you got your balance brought down and balance carried down, you want to look for any transactions that relate to the payables control account. Okay, any transactions that are dealing with credit purchases. So from our information, the only transaction we saw which deals with the credit purchases was this payments for credit purchases. So we put it on the debit side. Okay, because whenever you pay for a credit purchase, you debit the payables control account. So that's why I put it on the debit side. Once we've looked for all the transactions and everything, now we can get our credit purchases. So the way you get your credit purchases, you add the 19,500 plus the 6,500, you get 26,000. So in order to get your credit purchases, you're going to say this 26,000 minus 8,500 here, you get 17,500. So this 17,500 is your credit purchases. Yes. Any questions? Oh, yeah. Thank you, Mr. Chimoni. Thank you. That will actually save a lot of people's lives. Thank you, sir. Mm. Good. Okay, okay, yes. Yes, colleagues. Any questions? Are we okay with this? Mm-hmm. Mm-hmm. No, no, I think they are. I would say they're different. Because here, this payment is like you're paying what you owe. You're paying what you owe here. You're not buying anything. You're paying what you owe. Yes, money is coming out from your cash. From your cash account, money is coming out. So since money is coming out from the cash account, that's a credit side, right? Because remember, cash account reduces with credit, increases with debit. Payables control account increases with credit and reduces with debit. Okay. Yes. So we can now get our total purchases. Okay. We have our cash purchases of 500 kwacha plus the credit purchases of 17,500. So our total purchases is 18,000 kwacha. Any questions? Remember, I said the following transactions were not recorded. Cash purchases 500 kwacha. There's no formula here, sir. There's no form here, like the net worth method. That's where there was formula there, but here there's no formula. We are finding the total purchases. Total purchases includes cash purchases and credit purchases. On your trading account, whenever you see that figure there for purchases, it's including cash and credit purchases. Is that okay, Mr. Chimon? Is it okay? Mr. Dennis, where are you lost? Okay. No, don't worry. When we do for the credit sales, it will make things clear. Okay, it will make things clear. Okay, so we've got our total purchases. Next thing we need to get is our total sales. Okay, so sales revenue includes the cash sales and the credit sales. Okay, so the cash sales, we already have our figure in our thing in the cash book there, but we now need to know what were the credit sales. So the credit sales, you get it from the receivables control account. This is where it's the total of everybody who is owing you. Okay, so the receivables control account is an asset account. A receivable is an asset. So since it's an asset account, what does it increase by and what does it reduce by in terms of debit and credit? Mm-hmm. Mm-mm, that's a wrong statement, sir. That's a wrong statement. Okay, so the question is this. Once you know that the type of account you're dealing with is an asset account, what does it increase with and what does it decrease with in terms of debit and credit? Because you have to be aware of this information. Even though you won't attempt incomplete records, I know about 90% of you are not going to attempt incomplete records if you see it. Okay. But the other Yes, with the other topics, what we're doing here is also going to be applicable in other topics. Okay, like for the cash book, we saw cash book, how we're applying it here, also in bank reconciliation, that would be the same thing. Okay, yes. So, yes, the receivables control account, it increases with what? For the 10% who attempt this question, for the 10%, that's Mr. Emmanuel, Madam Sylvia, Mr. Chibu. No, even assets. We're talking about an asset account, but what you've said is also true. Yes, because even this information, when we look at control accounts, this information is still going to apply. When we're dealing with control accounts, you have to remember, okay, you're dealing with the receivables control account or the sales ledger. You should know that okay, this account increases with debit and reduces with credit. And if you have brought a question in control accounts for the payables control account, should be aware that, okay, I'm dealing with a liability account. It increases with credit and reduces with debit. Once you start from that foundation, things will be made. Things will be getting clearer as you solve. Okay. Uh, so yes, the receivables. Uh-huh. Yes. Mhm. Okay, it's good you have actually brought that up. Yes, it's actually good you brought that up. So for this receivables control account, we have the two main general entries that you must remember is whenever you make a credit sale and whenever you pay for a credit sale. Okay, whenever you make a credit sale and whenever you pay for a credit sale, or whenever a credit sale is paid for, actually. Okay, so these are the two important general entries you need to remember for those who answer questions on control accounts. Because here's like we're doing a bit of control accounts in here also. Okay. So when you make a credit sale, what is the journal entry? Mr. Kanson, I'm answering your question with this, okay? Whenever you make a credit sale, what is the journal entry? Hmm. What are we debating? That is correct. That is very correct. Whenever you make a credit sale, okay, uh, according to the cross concept, even though money hasn't been traded, you're still going to record. Okay, so yeah, it's like you've acquired an asset now. Someone is owing you money. Increase in an asset, you debit. So we debit the receivable. Okay. And then what are we crediting? Sales. Yes. Sales is a revenue account. Okay. According to this here, revenue income accounts increase with credit. So you credit sales. So from this general entry, because you're looking for credit sales, the figure for credit sales. So you should know that, okay, from this journal entry, my figure for credit sales should appear on the debit side. Okay. You should know where your figure for credit sales is going to appear. Because if you put it on the credit side, colleagues, what happens if you put it on the credit side and you have a CA of 5? Okay. Your CA is 5 and you're doing this question and you put credit sales on the credit side of the receivables control account. What will happen, colleagues? No, I'm not mocking you. I just want to show you the danger if you put these things on the wrong side. Okay, there's danger. Yes, yes. So we know that on our receivables control account, our credit sales figure should appear on the debit side. Okay. Then the second transaction we need to remember for uh, receivables control account is whenever a customer pays. Okay. So if you made a credit sale to someone, the person is owing you, then now they come to pay you. What are we debiting and what are we crediting? Madam Betha, Madam Helen, okay, Mr. Kasono. Hmm, let me just, when they pay, what happens? What's the journal entry? You debit cash, just because you're receiving money. Cash is an asset. Increase in an asset, you debit. So you debit cash. Then you credit the receivable. Okay, since they are paying you, so how much they're owing you reduces. So reduction in an asset, you credit. All right, that's why you are going to see receipts from credit sales. You're going to see it on the credit side here. Okay, when you look for transactions which are dealing with the receivables control account, and you see, oh, there's receipts from credit sales. Okay, then you know that, okay, so this receipts from credit sales is going on the credit side of my control account. Okay, so this is the way we determine our credit sales from the receivables control account. Step one, get the balance brought down and the balance carried down. Okay, that is step one. Get balance brought down and balance carried down. So you come to this information: trade receivables. Colleagues, what is the balance brought down, which is the opening balance, and the balance carried down, which is the closing balance? Mr. Twambo, to make sure he hasn't logged out to go and study by himself. Mr. Twambo, are you there? Hmm. Which one is the balance brought down and carried down? Yeah. Yes, yes. So 6,000 opening balance brought down, 6,500 closing balance carried down. Okay. So here you put this is your receivables control account, RSC. So you're going to say balance brought down since it's an asset account. So it goes on the debit side. We said it was 6,000. Balance carried down, take it to the credit side, 6,500. This is step one. Get the balance brought down and balance carried down. Step two, look for any transactions dealing with the receivables control account. Okay, and from our cash book here, we can see here receipts from credit sales. So since it's on the debit side here, you just know, okay, then it should be on the credit side of the receivables control account. Okay, so you put receipts from credit sales, 18,500. So remember, the figure that we're trying to extract is our credit sales, CS. Okay, X. We want to find credit sales. So first thing you do, you add 18,500 plus 6,500. What do we get? Okay, that's 25,000. So you say 25,000 minus 6,000. That will give us our credit sales. 25,000, 19,000. Yes. Any questions, colleagues? So our credit sales, 19,000. We've tabulated our figure for. Mhm. Wait, I'm trying. Oh, when I said about transactions involving the receivables control account, yes, then you look for transactions dealing with that. So any transactions dealing with credit sales is going it will be on the receivables control account. Yes. And any transaction dealing with credit purchases will be on the payables control account. Remember that, okay? For the 10% attempting this question. Any credit purchases, payables control account. Credit sales, receivables control account. So now we can tabulate our total sales. Okay. Total sales, cash sales plus credit sales. Cash sales, 9,400. Credit sales, 19,000. 9,400 plus 19,000, 28,400. Any questions? Okay. So usually for distance students, I don't think it will be very difficult for you. You it's mostly just get credit sales and credit purchases. Those two figures, those are the two that you just be looking for. Okay. These questions can get more complicated and they start putting other stuff which you need to get, but usually it's these two things. And once you've got these two things, you're able now to make an income statement. Okay. An income statement starting with the trading account. Have you seen how this topic has hit three topics? Control accounts and now financial statements. That's why, yes, madam. Oh, yeesh. I've got question. I can also walk you through such. So, okay, okay, okay. So now we form the trading account. What is the purpose of the trading account? Thank you. To establish the gross profit. What is the first item that comes on the trading account? What's the first item that comes on the trading account, colleagues? Mr. Chimonia? What is the first item on the trading account? Mhm. The first item? Mm. Sales revenue. Okay. Yes, sales revenue. We've got this 28,400. What? Yes, cost of sales. We have to tabulate our cost of sales. So the first thing we bring in is opening inventory. Colleagues, where did this opening inventory come from? This 9,500? So opening inventory 9,500. Next, purchases is the next item. Okay. Okay, just hold on, colleagues. Hello. Hello. I'm just about to be done with class. Yeah, that's like, let me finish my class. Okay. I'll call you. Bye. Sorry, was on a call. On a call, sorry. Yes, Mr. Chimunya. Oh, every time I get a call, usually it's this what will happen. It will do like network has been lost for a while. Yes, for second GM, we use Starlink. Starlink there will never be an excuse at network. Okay. 95 plus 18,000. 95 plus 18,000. This is the total cost of goods available for sale. Okay, whenever you add purchases with opening inventory, it gives you total cost of goods available for sale. There are two adjustments that usually are made with purchases. What are those adjustments? Yes. Do we subtract or add? Wonderful. Yes. And then also, what else? Yes, carriage inwards, the delivery expense you incur. Do you add or subtract? Yes. So, colleagues, remember that, okay? In case a trading account should come for you. When purchasers look for any carriage inwards or return outwards. All right. So, in order to get now our cost of goods sold, we need to deduct closing inventory. Closing inventory 85. 27.5 minus 85, what do we get? 19,000. This is the cost of goods sold. Okay. Then to get our gross profit, it's sales minus cost of goods sold. So you're going to say 28,400 minus 19,000. What do we get? 9,400. So that's our gross profit. Any questions before we get net profit? Do not end on gross profit. Okay. Don't end on gross profit. Even net profit you need to calculate. So you said 9,400? Okay. All right. Cost of sales. Mhm. After you get it. Mhm. No, no. The expenses, yes, are coming, but there's something that comes before expenses. Yes. 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 Add other income. So we come back to our information. Can we spot any income? Yes, commission received, this 400. And any other? Commission received accrued. Okay. Yes. This commission received accrued is the commission is being owed to you. All right. You've done whatever you need to do, but you haven't been paid. So it's been building up and it's reached 800. Okay. So commission will say 800 plus 400. Commission payable. Yeah. Yes. So add 94 plus 1,200. 10,600. All right. Wonderful. Yes. Now, as Mr. Chimunya said, now we deduct expenses, less expenses. All right. So first expense we can deal with is, let's see, we look here. What expenses do we have? We have motor vehicle expenses, 2,300. What else? We have wages expense. The drawings, this goes in the balance sheet. It's deducted from capital. So don't take drawings as an expense, no. Okay, so let's see. Cash purchases. Oh, we've also got this purchases expense here. This 500 kwacha here. It's an expense. Remember, it's also an expense. Oh, even that one, yes, madam. Even wages accrued. Okay. We need to add that. So we also got this expense here, cash purchases, and wages accrued. Wages accrued, you come to the ending balance to see how much has been accrued in total, which is 500. So we've got wages accrued 500, purchases expense 500, this 6,000, and this. Oh, for wages first, 500 plus 500 plus this 6,000. Who's joining this time? Any other expense? Oh wait, this purchases expense was included in the trading account. That's I'm double counting by doing that. I'll be double counting. That 500 purchases was included in that purchases expense. Remember when we added total purchases? Yeah. So why didn't you say that, sir? No, they are. uh, yes. Are those the only expenses we have? Wages, motor vehicle expenses. Yes, there's one more expense which is called depreciation. Where can we get our depreciation amount from? What is the definition of depreciation? Loss in the value of an asset. And here, have you seen that the motor vehicles is 25,000. Now, at the end of the year, they're 22,000. Okay. You just subtract 25 minus 22, 3,000. So this is the depreciation expense. Mhm. The only funny thing is, incomplete records is about people who don't know accounts. So how would they know the value of their car today and the other day? Mr. Chimoni, how does someone who doesn't know accounts know the value of their car today and at the year end? No, I just ask myself this question like, this the person doesn't know accounts, but how are they getting a value for their assets at the end of the year? How are they determining? Okay. So these are our expenses. So we add them up. 6,500 plus 2,300 plus 3,000. Okay. So our net profit 10,600 minus 11,800. Yes. In, sir, not all businesses make profits. Yeah. Okay. Negative 1,200. Yes. So they've made a loss. Okay. And as an accountant, you have to break the news to them. Sir, this year you made a loss. Mhm. Don't sugarcoat things that you won't hire me again. The prudence concept. Prudence concept.